Hello everyone, welcome to Investing Intel. This is Mahesh Muppadi. So today we are going to learn about how to understand trend in the market, how to identify, because majorly many market aspirants don't understand how to mark trend lines and how to follow the trend. They are confused because many mentors say that you don't have to force yourself marking trend using trend line, but they don't understand how to precisely mark the trend lines on the chart. Secondly, what is momentum? They analyze momentum by using indicators, where indicator use price itself. So I want to share what I have learned and how I use price, understand price, and analyze momentum on the chart, which helps me understand when to enter and how to effectively make maximum profit in shortest period of time. So today I'm going to share how to mark the trend line, how to analyze the momentum, and how to see the trend shift in the market. So let's understand the market trend and price action with respect to price action and analyze so that we can catch the trend and momentum in the market. So why we need to understand trend in the market? Because it helps us understand the phase of market, and it helps us improve our timing for making maximum profit from the market, and entering and exiting in the right time, and analyzing market trend, because many aspirants analyze market trend with respect to indicators, but majorly if you understand with respect to price action, it gives way early entry. So without using any indicator, only using price action, let us understand how we can read the trend in the market. As you can see, there are three core market trends, that is uptrend, downtrend, and sideways. So uptrend is defined when price creates higher high and higher low, and it breaks the previous high, where slow and steady buying strength improves, and you can see a good bullish momentum in the uptrend. Secondly, downtrend, same, lower high and lower low is created, breaking the lows and with confirming a selling pressure. So this is where bearish trend is created. And the third one is sideways trend. In many mentors only explains the sideways momentum as the similar high and a similar low, but there are two type of sideways trend. That is, first is wide range consolidation phase, and the second is narrow range consolidation. These help us when you are trading in the market. Understanding wide range and narrow range is very important, because as you can see that in wide range, if you are trading, wide range will and consolidation phase or sideways range is a wide range, so you can trade. It is a tradable zone where you can think of a good risk to reward ratio, and it will also help you entering at the right point. But when you see the narrow sideways zone, it is not a tradable zone. It is a highly volatile, and major traders lose their money in the narrow sideways zone, because they don't know, nobody has taught them ki there is also a concept or a phase in the market that is a narrow sideways zone, where it is not a tradable zone. It is a very volatile, and many traders hits their stop losses, they lose money, and they erode their capital in such phases. So you need to understand that this two phase of sideways zone is understanding. This is very important. Wide range sideways zone, it is a tradable zone, and it is more than up trading in the uptrend and the bearish momentum or bearish trend. Trading in wide range is very you can trade this wide range very easily, because entry and exit very much defined. Because in uptrend you will be following a trend, you don't know where price is going to go and how much it is going to what will be your target. Here you can easily define your target. So moving ahead, how trend emerges and how trend sets, and again it is sustained in the market. So understanding this is very important. We'll understand this to one of the chart. Okay, so as you can see here, there is one chart. So you will see that currently the price is in a consolidation phase. Slow and steady, if you see in this consolidation phase, price is setting a trend. Once the breakout happens here in this part, as you can see, in this part breakout happens, you will see that higher high and a higher low is created here. So we'll see that here slowly higher low and higher high is created, and this trend, and many aspirants don't know how to even mark trend line, because as you can see, trend line should always be marked once the higher high is broken in an uptrend. See, if this is a point A and if price has broke out this level, so this is where you will be marking your another point. Okay, so this is how you can get a perfect trend line. Okay, so again, when this high was broken here, so this is where decision was made to, and this high was broken. So you can, from this point to this point, this is the next point where you have to mark your trend line, and this will be your second point, and this will give you a good trend line, perfect trend line. Because many mentor, as I was also in a confusion state. Okay, so how to mark a trend line and what point, because many time it have given an inefficient trend line, and it made me very difficult to understand what trend market is setting. So when you follow such points, I realized this point very late, and this has made after learning this, it has made my analysis very effective. So this will surely help you. So when you can see that this higher high and higher low is created, the trend is setting very much slow. Okay, after breakout, you can see the trend higher high created here, and slow and steady market is setting up a bullish trend. Again, this high was broken, and this point and then again, if you see that this high is also broken. And secondly, many aspirants, one of the concept, that is a momentum, which they don't understand. They try to gauge momentum using indicators, but price itself show that it has slowly creating a momentum. So you can also see here that the pullback, once price started rising here, the pullback is big. Okay, as you will see that how price is moving upside, the pullback is getting very weaker. Okay, and very shorter period of pullback you can see. When the price is in such impulse, price is giving such an impulse movement, and the pullback is very weak, very shorter period, for a shorter period of time, and then again the candle you can see here is very strong and a big rich candle. So when such price action is created, with this you can understand how strong the momentum is in the market. So this is how you can mark the trend line. I know this many would have not known until now how to mark this trend line, but it took me a lot of time to understand, because many painters used to say that you just have to mark the lower low and understand the trend in the market, but it was very ineffective and inefficient. This is what I have learned and I'm sharing you today. So I hope this will help you. You can mark on this chart and understand this, and you will clearly see how effective it is. Whenever the trend, whenever the higher high is broken, you have to mark the low from where the trend has started. That will give you perfect trend line. So moving ahead, this is how trend is set, and after the breakout. So understanding trend acceleration help us understanding momentum in the market without any indicator, just reading price action. So slow and steadily the momentum is set in the market. So if you are an option seller or an option buyer, so when you can use this acceleration for as an option seller, and where you can use this acceleration for as an option buyer. Okay, so you can, once you understand this, you will be able to time that. So when you are an option buyer, you need to very cautious about the theta in the market, and how to do this help us to enter in the right phase, which will help you to gain maximum as a option buyer without thinking more about decay, and with a quick price movement. Okay, so as you can see on the chart that slow and steadily the momentum is setting, and you can see that the acceleration, that how you, for example, if from point A to point B and point C to point D, okay, how slow and steady the trend shifts and momentum increases. Okay, so here if you see in the initial phase, the pullback is very deep and for a longer period, because the accumulation is happening here, and seller interest are more, so they try to drag the price for to getting at a cheaper rate. Okay, and then once the selling is complete, buying is completed, you can see the price movement. Okay, and as the acceleration increases, the pullback is shorter, and the depth also reduces. Okay, so you can see the consolidation here, the pullback is here larger, here pullback is little bit steep and fast. Okay, the recovery is very fast. So this, if you see from this point, if you see from this point to this way, the recovery is very fast. So if as an option buyer you can enter at this price, and you will get such momentum. So if you see here, see the acceleration here from, see at this point and this point, you will see the momentum is very strong. Here pullback, if you see the pullback is deep, here pullback depth is reduced, and if you see when the price is in a very strong momentum, the pullback is very less. See this, pullback is very less, and the recovery is very fast. It is in, so this way you can understand, this shows what momentum is. Till now nobody might have know what momentum is actually. Many might still be using indicator to understand, but now you know how you can read the price and understand the momentum. So this is how I read the trend and understand the momentum without any indicator. I hardly use any indicator. I only depend on the charts and price action to understand the momentum. This is how you see the slow and steadily the acceleration is increasing, and the with respect to acceleration, the pullback or the correction, and that is also very small, and it is reducing. So when you see such, you can as an option buyer you can take entry, and when you see that the trend higher high and with higher high and a higher low, the pullback is very deep, at that point you can think of option selling. So this is the big point that many might have not known until now. So as you can see, this is the Nifty 15-minute chart. I am showing the 3 phases of the acceleration. In the first phase, okay, as you can see, the pullback is deep. See the trend, this is the downtrend, the pullback is big. Okay, Same way, there is a consolidation here, okay, and see the pullback. And when this is the first, this is the second phase of the trend, okay, see the pullback and see the momentum, okay. And when the market from this point, okay, so from this point to this point, market enters into a third phase, the pullback is very fast and again the recovery is very fast. So this is how, when you understand this in with respect to price action, in first phase you can think of option selling, but as you synchronize the trend line and the pullback price action, you can, in third phase you can think of as an option buyer, where pullback is very shorter but the price fluctuation and the price movement is very fast, and you can achieve your target very fast with good RR. Plus the decay of an option, that is very much concern for the option buyer, that also gets eliminated and it helps you. So same way, price behavior and uptrend in an accelerating in an uptrend, so it helps us gauging momentum and again trend. So, and understanding this with respect to pullback in upward movement, in bullish movement and in bearish movement, will help you. In bullish momentum, the red candles, whenever there is an uptrend, the red candles will be less, and in a downtrend, whenever the momentum is strong, the green candle will be very less. This is a very this 2 point when you are analyzing chart is very important. You should keep in mind and follow this. So it helps us early entry, avoid weaker move from the market and effectively exit. So even if you will be seeing a very successful trader and investor, even if they have a particular indicators on their charts, but it is a very unsaid thing that they don't read price action. 90% of their analysis depends on the price action. If you see the interviews, or if you meet any investor, successful investor and trader from the market, if you see them, you will understand that indicators are just for riding the trend or exit. Majorly they analyze and they read the price, because with a lot of experience in the market, they understand what market is doing, how price is reacting at different level. So understanding and price action is very important. Indicators and everything are the secondary part. If you don't understand price, it will be very hard for you to make profit from the market, and you will get confused with all the indicators that are there in the market, because from 1 out of 100, 5 out of 100 or 7 out of 100, there will be a synchronization with the price and indicator, but 95 times it will just confuse you. So don't depend on the indicator, understand price action. Initially it will be a very difficult in understanding, but as you practice, as you give your time, slow and steadily, it will be just 2 to 3 seconds that you will understand just by seeing the chart. So all this concept, if it is helping you for analyzing and effectively understanding the charts, then like and subscribe my channel and follow for more.